Good morning and welcome to today's MamaMancini's webcast as a part of the Planet MicroCap Showcase. It is now my pleasure to turn the floor over to your host, Carl Wolf. Please go ahead.
Hi, everybody. Sorry, there's a glitch in getting on. So, I'm welcoming everybody to our presentation. I'll try to move pretty quickly. Just to let you know, we announced our year-end and quarter sales and earnings, which were pretty positive. We earned $1.7 million versus $400,000 last year. Approximately $1 million was operating profit, and we got a $700,000 tax realization credit. Overall, the year was over $4 million in profits versus last year, which I believe was around 1/8. Okay, so I'm going to move through this to catch up. Okay, so as an overview, we're a manufacturer of fresh prepared, all natural foods, mainly in the Italian foods area, and we're available in 45,000 plus locations. Our model has been scalable. We've grown very rapidly over the years, and we think we meet today's lifestyle. As just mentioned before, we've had very, very significant increase in sales and earnings over the years. We're launching into the food service area, and we're actually selling beyond meat on QVC. We also just began selling beyond into Publix, and we have a few more plant-based customers coming on in the next few weeks. We have 47% insider ownership and quite experienced. We're a real company. Anna Mancini, who is Dan Mancini's grandmother, came to the United States 100 years ago. Our current Sirius radio advertising emphasizes that fact. We'll be on again within the next month, and about 1,000 commercials across the country, and it's been very, very effective, Sirius Radio. Sirius has about 75 million reach of more upscale people. We also are on QVC, which is in over 100 million homes in the United States, and we have a very, very active social media campaign, and we have about 500,000 likes right now. So we're in the perimeter of the store. Even though most of our product is sold frozen, it's defrosted at the supermarket chain and then put out on the shelves either as a pre-packed consumer product, or it is put out as pasta bowls, where they make the kit. Think of Blue Apron, and the kit is very easy to put together, and that business has been growing very, very rapidly. There are a number of new authorizations will be announced in the near future. So that area of the supermarket, the perimeter, which includes a hot bar, the deli section, grab and go, sandwiches, the fresh packaged meat, bakery, etc., is growing very, very rapidly. It's a very big business, and it represents about $36 billion total. We have, we say 26, but actually it's up to 29 products. The most recent being bolognese sauce, which has been very, very successful. In fact, we're dedicating more area in our production to handle the demand for that product, and we expect a number of new authorizations besides the ones we have already. We also have new Italian dumplings, which is doing very, very well, and chicken sausage. So we have a whole host of items. The most popular is meatballs, and then we have stuffed meatballs, meatloaf, stuffed pepper kit, which is also very, very popular and increasing a lot. Chicken parm, we just upgraded the quality of our chicken. very significantly, and with that has come new business. Chicken Alfredo, which is down on the bottom, is also a very, very popular item. Our new authorizations, before we get to this, have been, many of them have been branded products. About 50% of our product is white label and 50% branded. We've gotten a lot of very positive results in the branded area, especially in club stores. This is just a slide showing that our products are very high in nutrition versus competitor products. We have no soy. We don't have a lot of filler. We have no coloring. Very often when you look at a meatball product, the first listing is ground beef, the second is water, and the third is caramel food coloring. Most of competitive product is with imported beef. This is just telling you who we sell. QVC is very important to our business. We doubled that last year. They're looking for very, very significant sales growth this year. The world's largest direct-to-consumer marketer. Believe it or not, we do a lot of business on QVC, day in and day out business where people go to the website and buy our product for delivery, not related to a presentation. You have to remember that every time we go on QVC, it's an 8 to a 15-minute infomercial. Dan Mancini, who is our spokesperson, is pretty well known at this point. And so we've gotten a lot of recognition in the United States. We've been on QVC for over 4 years, and we're one of the top producers. Just jumping back to the top, so we sell Costco, we sell Walmart, we sell Sam's Club. We're doing a little business with Kroger now. We'll be doing a lot more. We're doing a modest amount of business with Albertsons, Safeway. We'll be doing a lot more. Whole Foods, the same thing. These are all customers that are coming on very, very strong. This slide actually is a little obsolete. I will update it, but what it shows is that even though, let's take Publix, which is a 1,200-unit supermarket chain in the Southeast, although we sell them fully penetrated, we have new items. So we recently just put in test beyond plant-based meatballs and penne. If that is successful, which we have very high hopes, it will go into the whole chain and the volume will be increased. If anybody's in the Southeast, our whole pasta bowl line at Publix will be on major promotion week starting May 20th. So even though we sell a chain, there's many more items. We presented 5 new items to Publix. 1 has been accepted already, and we think we'll get 2 or 3 more. That 1 will start in the next month. This is just showing that what we're doing is looking at larger customers, whether existing or new, and we're looking for each incremental sale to be in the $3 to $5 million revenue. So as an example, going back to Publix, if we were to get in 3 or 4 new items, it would be in the $5 million additional sales range. Our plan has been modernized. We just put in a new efficiency machineries in the packaging room. So we've had a lot of increases in capacity. As I just mentioned, we're building a new room to handle our meat sauce line and also stuffed peppers. What we've done is moved our office space to an adjacent location, and we have moved our in-house break room into the office and taken the break room and put other area and made an additional production. We have very significant in-house Q&A. We've added a few people, and we have enough capacity, we believe, to increase our volume to about $70 to $80 million, and we are looking where we go next after after that occurs. We do believe that we have some very, very major opportunities, and if we need additional, significant additional capacity, it would probably be in 18 months, and we probably would look at a new plant. Okay, so this is just showing you our financial numbers. We're up 21% in sales. Our gross profit increased significantly, 1.5 points. Our net income, as I mentioned, was very, very substantially higher. And most importantly, our cash is up dramatically. We had no debt where we had prior year, $4 million. Our cash is now up to $3.2 million versus 0.4. So basically, we've paid off $4 million in debt and still have $2.8 million in additional cash. Some of that has come from conversion of warrants, and some of it, as we show here, cash provided by operations. In our sales numbers, you can see our growth. Recently, if you read the 10K, we have accounted for promotions as a sales allowance, where in the past we didn't. So if you go back to prior years, early years, if we applied that, their sales would be down on an average about 8% a year. This year, the effect was about 2%. So it's a very minor effect. It did not affect our bottom line. It actually increased our profits as a percentage of sales. This is just our background. I've been around. I've been involved with 3 other NASDAQ-listed companies, most notable being Alpine Lakes, which I started with my wife, and we eventually sold through Merrill Lynch. Goldman Sachs was our banker at one point. At your leisure, you can review our key people. Okay. One item I'd like to point out is Chris Styler, our executive chef. Kind of sleeper, but the advantage of Chris is that he can make a recipe, but then deal with it when it's mass produced. It's one thing to make a benchtop, it's another to produce it. So the takeaways are very similar to before. We're an all-natural product line, natural foods. We're in over 45,000 locations, and we expect to get into new businesses such as food service, and food service consists of several areas. One area we're looking at is convenience stores. We have a new product which we think will be introduced in test this spring, and there's 300,000 convenience stores. We're actively soliciting hotels and convention facilities. Addition of Mike Stengel on our board has been very, very advantageous to our company. He was head of all convention hotels, I think 150 of them at Marriott, including the Gaylord. It was about $1.5 billion business, and he has just joined our board. In addition to that, we're going after colleges and universities. All this got put on hold because of COVID. College and universities is interesting in that our plant-based products and our all-natural products and gluten-free products appeal to that market, and we think that could grow to a very substantial business, over $20 million. We're also going after what we call the independent deli business, and we have a kiosk concept that is a store within a store, very low startup, that would be a very, very significant business for us. It also can go into airports and other locations as part of a larger takeout operation. So we do in-house manufacturing and testing, and we have strong financial improvements. What's not on this list is our search for acquisitions in the $20 million to $30 million range, EBITDA of 10% or more. Management stays very significantly accretive relationship after purchase, also accretive in terms of profits and loss. And we think we can finance deals in that size without any equity raise, just through our cash and through financing. And so our products meet today's consumer needs. About 2/3 of consumers decide what they want for dinner after lunch. Anyway, we meet that need, and we think that will continue to grow. People have gone into supermarkets for that food at the last minute. What's interesting is the hot bar business and the perishables deli business was down because of COVID. So we lost some of that business. We kept the business, but it wasn't there. And now it's coming back, and we think by September we'll have most of that back. And that is very, very significant volume. And last but not least is experience management. So that is what we have. Those are our contacts. If you contact Luke. And now we'll go. I'm sorry for rushing a little bit. We're now going to go to questions. So the questions, operator, how do I handle that?
Ladies and gentlemen, the floor is open for questions. If you're listening to Webcast, you may submit the questions using the Questions tab.
Where is the Questions tab on mine? Q&A?
It should be, yes.
Okay. All right, so the first question was, how will Connor Haley and Mike Stengel help the board of directors? Well, Mike Stengel, as I mentioned already, was executive vice president of Marriott. He started there and grew up there. I think he was there for 40 years, and he's been around the world and totally knows the food service area in many, many aspects. He's already helped us out in introductions. Connor owns a significant amount of our stock. He's a true professional, very involved with as a board member, and he is on the acquisitions committee for us. So anyway, it's very possible. How long will the NASDAQ initial listing process be? We think we've completed all of the questions, comments. The question now, the last area, is what the stock price will be. If it's $3 for 5 days, we will automatically uplist. If the stock is above $2 through June, we will automatically uplist. If that is not the case, we will do a reverse split. So I would say either in the next few days or the next several weeks, we should be uplisted, but we're committed to uplisting. Do we plan on adding grass-fed beef products? We have tried that in the past. We have an antibiotic-free product that we sell to Whole Foods now. But grass-fed really did not do well, even though it seems to have business at retail. We're not against it. We have resources on it, and we can do it if there's demand for it. The question is, the new authorizations the CEO cited in their PR of March and April, what is the potential impact on revenues? Is it 3% or 5% or 20%? Whatever color you can provide would be helpful. Okay, so the new authorizations have been coming in. The whole business went on hold from last March through, in essence, September. And then you had Christmas, which chains don't like to put in new merchandising activities because Christmas is a higher sales period. So these new authorizations now are coming in, first orders, et cetera, most of which are coming in the second quarter and the third quarter of this year, which are very, very substantial. The amount of business, and they're also with substantial national accounts. So the impact is substantially above 20%. provided, one, that we get our first orders, which we believe we are, and two, once you start, that the introduction is successful. That means that our customer puts the product out properly, which we watch, and whether there's consumer demand. In some of the new authorizations, the demand is already there as we've gone through tests, and we know that they're very successful. And in others, such as hot bars, there usually is success. In terms of consumer demand, the question will be how the chains handle that. In the case of hot bars, we already sell Whole Foods nationally for their hot bars, and they shut down in basically end of February. We did zero business through second quarter, and then it's slowly coming back each month. It's a very substantial amount of business, and we think by September it'll be back to what the projections. That alone would add over 10% to our business. So, and then we have 3 more items under consideration at Whole Foods right now, in addition to the ones we sell them. Any other questions? You have 4 minutes. Okay, no other questions. I'd just like to say thank you. I'm sorry for the confusion on being late. We are very, very optimistic. I should mention that incremental business represents 20 to 25% operating profit to the company. So we're very, very optimistic about future profits as well as sales. Our products are proven in terms of taste and quality and nutritional benefits. And we're now actually really hitting our stride and getting into major new accounts. So, and many of them are packaged products. So our branded, the pasta bowls are branded. Our new authorizations going into Sam's, in additional divisions of Costco, Walmart, and going into Albertsons, Safeway are all branded, as well as new items in Publix. So our branded part of the business appears to be growing very rapidly. We're also very, very optimistic on direct-to-consumer. We have, we'll be announcing shortly our start date on that. That will be very beneficial to the company as well. So there's a lot of things going on, acquisitions, new food service business, new customers, etc. So we're very, very happy with our prospects. We have questions 14. So where are the other questions? Here we are. I'm sorry, I didn't see this. The revenue, the question was, what is our revenue potential? I would say it's as big as the retail supermarket business. The COVID impact in 2020 was very, very heavy positive impact on club store business in the first and second quarter. Hurt sales for the deli and hot bar and sandwich business. That now is coming back. The club store business is now backing off. How many warrants? We have no warrants outstanding. We have options of about 800,000 shares, which is very low. We have approximately 35.5 million outstanding shares right now, a little over 36 million fully diluted. Serving restaurants as end users? No, we will not go. We think there's plenty of ability to deal with restaurants, but not their customers. All of our production and management facilities in East Rutherford. If we make an acquisition, it's very possible that we will, if they have capacity, that we will move some production in there. We don't see, if we open a larger facility, we don't see it putting elsewhere in the country. which is our highest sales volume at Sam's Club and Walmart. I think I've already answered where do you see this supermarket growth in which chain. Okay, our business model looks great. I agree. What do our operating margins at full capacity? We hope to get up to about 15 to 16% profit once we reach that level. If you remember, I stated that we're making 20 to 25% operating profit on each incremental sales. And that is it. And just met the time, and I got everybody's questions answered. And wait, I think there was one more question. Any international ambitions on the horizon? Not really, not right now. Possibly Canada. That's been stop and go. Right now they're in lockdown again. So I can't say what's going to happen there. But right now we're concentrating on the United States. Thank you, everyone.
Thank you. This does conclude today's webcast. Thank you for your participation and have a wonderful day.